We have two rate cuts back-to-back this calendar year itself in October and December. But I would say RBI actually has a different reaction function. They are not one of the central banks in the region that follow the Fed. Their reaction has been more focused and driven by domestic considerations. So it's really been high food inflation and resilient growth that's held them back. So our call of cuts, therefore, is more driven by these domestic factors, giving them some room. Of course, easing Fed helps at the margin.
Okay. Sonal, there is absolutely no denying the economic momentum that we have seen in India in the past decade, but there are challenges that need to be addressed, not least of all rising youth unemployment, and then, of course, the need to crowd in private sector investment and expand private sector investment to other more productive areas of the economy. What sort of job do you think the administration is doing on that score?
I think, the way I would describe it is like last 10 years have been spent in creating the foundations. You needed strong balance sheets, so that's been done. Macros generally are quite stable, and there's certain reforms that you needed to, again, incentivize investments to come in, supply chains to come in. A lot of those reforms have been done, are being done. So the basic bread and butter foundation is there. Now, the evidence of that in terms of supply chains coming in is something we are seeing in the case of smartphone assembly and semiconductor assembly and testing. Of course, we need this to broaden out to more sectors. Private investment, actually, I would say like housing is picking up, government infrastructure is up, but private machinery and equipment capex is not, and that is partly because capacity utilization is still low. So, the foundations are in place, and I would say we are waiting for the broad basing to actually happen, which is sort of the hope that the government has for the next 5 years. But you're right. I mean, we still need to see that happen.